Well, hello and welcome to the CNBC Africa special on investing in Africa. I'm David Williams. Over the last decade, Africa has been hailed as the next big business frontier, promising growth, offering opportunities for investment. Is that outlook changing now with the gloomy global economy and falling commodity prices? Well, with me now to talk about the investment environment on the continent are Cheryl Buss, who is Head of Global Clients at Barclays Africa, Bryan Leith, Chief Operating Officer, KPMG Africa, Julie Tregurtha, Head of Database Technology and Mobile Sales for Southern Africa at SAP, and Wildu du Plessis, who is Partner and Head at Baker and McKenzie in the Banking and Finance Practice Group, and Nomzamo Xaba, who is Group Executive, Research and Advisory at Empowerdex. Well, panel, now that we've got your CVs out of the way, it's time for a break. Lots of titles there. Now, I want to just say to you, I'm sure all of you have expertise in Africa and you've traveled there. I have as well, so I'm going to draw on some of my own experience where I haven't had much time to investigate, but I've got impressions and we're going to explore some of those. But Cheryl, I'd like you to kick off from the position of Barclays Africa. What strikes me, and I hinted at it in the introduction, was that we've had this growth story. We've had 6% and so on. South Africa, of course, very much an exception in the last couple of years. And is the growth story stalling? And I think if you ask any company in Africa, they'd say, well, it may be, but there are still massive opportunities.
Yeah, thank you, David. And I think you're absolutely right. When one looks at Africa today, the African promise of perhaps 4 years ago is somewhat more subdued. But I think what we are seeing is that Africa is a long-term game and that the investment in Africa should be of a similar nature. So I think when we want to see investment in Africa, we need to ensure that we do invest for the future. I think if you take the broader global context into account, as you've mentioned, we've seen significant change across the world and severe headwinds, be it the Arab Spring, be it the migrant issue. And so Africa hasn't been unaffected. I think what we see in Africa, however, is opportunity. Africa has a number of positives that are coming out that we'll discuss during the day. But yes, today as it stands, perhaps Africa hasn't seen the rising that we have seen over the past 4 years. But as you rightly say, we're still seeing growth on the continent.
Yeah. Let's move along the table just to get everyone's first impressions. Bryan?
Yeah, I agree with what Cheryl has said. I think, if we go back probably 18 months, I think big international investors had woken up to the Africa opportunity. The Africa population growing at 500,000 people per week, every week. A huge increase in the middle class, consumer demand going to explode. And the international world realized that, and they all packed their bags ready to go to Africa. And with the global slowdown and with what's happening on the continent right now, I think they're busy putting their stuff back in their bags. And we've got to make sure that they don't put the bags back in the cupboard. They've got to stay there ready to get into the starting blocks to come to Africa because we need them and they need us because it is the last opportunity.
All right, so already we're seeing great opportunities, but not so fast, not so easy as you think. And also there's no such thing in a way as Africa. There are lots of countries in Africa, each with their regions, their countries. Julie?
Well, I agree with Bryan. I think that what's interesting in Africa is, the varied opportunity across the different countries. From a technology perspective, I think it is exceptionally exciting. Maybe things have stalled to some degree with, slowdown in certain economies, commodity prices, impinging economic growth. But the time to invest is actually now. If you look at the mobile industry, 10 to 20 years ago was when a lot of the mobile and technology companies were putting up mobile infrastructure. They have reaped that reward over the past 10, 20 years through the growth. Now's the time to be looking at the next wave of that in terms of RTC infrastructure and innovation. And what's so key and so exciting in Africa is that there is not the bureaucracy, necessarily the traditional old style approaches that are
going to be...
This
is a good thing or a bad thing?
It's a good thing. It's not going to weigh down. You could take a greenfields approach. You can take a, starting from scratch approach in Africa, and you can use that to leapfrog. So I think this is opportunity that presents investors where if they look at timing it now, even though things may have slowed down, it's an opportunity to make sure that you're there at the time that the uptick really starts, and it will come.
I think of Kenya, where they've got with the cell phones and the banking. Now we've got that here too, but in Kenya, they've sort of bypassed the fixed line era because so many people never had got fixed lines, and they're not going to now. So that's the kind of thinking and the opportunity that you're talking about. Wildu?
Yeah, I think so. I mean, I want to come on to something you mentioned, David. The way that we look at it, so we advise a lot of investors into Africa, and we do a lot of work in emerging markets, not only Africa, other emerging markets. I think it is still the case that Africa as a region still has the second largest predicted growth rate in the foreseeable future, so it is a region that you can't ignore. What we've picked up, I think, is sort of, and some of the other speakers started to get onto that, but is to say that I think investors are becoming a bit more savvy by looking at 53, 54, depending on your definition of country, 54 different markets, looking at what the opportunities are that exist in a specific market for their specific sweet spot. So I think a bit of what we're seeing, there's definitely a slowdown, but a bit of it is sort of investors starting to focus a bit more on very sector-specific and region-specific investments, rather than just looking at Africa as one huge opportunity.
Okay, so we want to start breaking it down, and we don't have to talk Africa or the rest of Africa. We have to be careful in South Africa. For a long time, we never thought of ourselves as African, and there is a habit of conversation which talks about Africa as though we're not in it. It's the rest of Africa, isn't it, really? So I want to start thinking, each of you, about some of the challenges and obstacles that you found in particular areas. But Nomzamo, big picture for you.
Yeah, so big picture for us is that not working in the area where we necessarily advise companies to go into Africa, but what we're finding is a lot of foreign companies, and by foreign I mean outside of Africa, who come into South Africa and use us as the base point from which they'll explore the rest of the country of Africa, as some of them seem to think it is. So what we've found is that what works in different regions, in the same way that what works in regions across the globe doesn't necessarily work in Africa, what works in African countries won't necessarily work from region to region. So companies need to be more intelligent, that they need to apply themselves more in terms of how they come into the regions, and thinking like if you use the M-Pesa phone technology banking application into South Africa, that didn't work as well as it did in East Africa. So companies need to think more clearly about what it is that they want to do and how they want to approach the rest of the world. And we can't continue to use South Africa as the sole base. I mean, if you try and do business with West Africa, trying to do it from South Africa is simply not going to work.
Yeah. Okay, so we've had a sort of general picture. Now, by way of getting into the challenges and the obstacles, let's take a particular issue for investors at the moment with Nigeria and Angola. And I had a fascinating afternoon interviewing someone from one of the companies in Africa at the moment, and they now put the risk of not getting their money out in their accounting. And I've not seen this before. Maybe I've missed it, or no one's told me about it. I'm not an accountant. But they have a hedging policy against not being able to get money out, and they have a way of declaring it in the account. So it's a big issue, getting money out when you've invested. Yeah. So there's an example. I mean, it's almost like that's the big one. Before you talk about infrastructure and whether you can drive your car where, you say, hey, but can we get our money out? Every investor wants to know that. Cheryl, you want to kick off with that?
Absolutely right. And you make mention of infrastructure, definitely a challenge across Africa. And that requires a lot of capex, a lot of investment, but then companies want their return out of it. And more, the issue of liquidity and the issue of convertibility and the risks associated there are coming out. So it's all very well to put the investment in, but when it comes to actually converting and want to pay the euros or the US dollars out, and there's no available liquidity and your cash is trapped in country, that becomes a major problem. Another problem, and that's not only just for dividends or what have you, but think how it upsets your supply chain. Yeah. So you're importing, you're an active importer, and you have to pay for your proceeds, for your imports. how do you actually do that when you cannot convert your currency?
Well,
so what we're seeing, in a couple of countries, Mozambique is a case in point. They've really had a liquidity issue over the past year. And what we're seeing is that the importers have just stockpiled cash because they actually just cannot pay for their imports.
So that's clearly a challenge. Other views on this? How do we fix this? Because companies can hedge, but hedges can go badly wrong.
Absolutely, no. I think this is now probably the biggest risk in Africa is the lack of liquidity. And it comes from various causes, primarily the fall in the commodity prices, the fall in the oil and gas prices. So there's not as much foreign currency coming into countries as is required to meet the needs of cash flowing out of the countries. Particularly hard hit, in addition to Mozambique, is Zimbabwe at the moment, where on top of all the problems I've just mentioned, they're looking at now introducing their new local currency, and people are scared that they're going to go back into a hyperinflationary situation. So everybody is holding on to every single US dollar that they get their hands on, and the dollars are not going back into the banking system.
Okay, so one way of handling this is from an accounting point of view, you reduce the risk, but you also increase the risk in other ways.
Correct.
Julie, you're at SAP, Wildu, you're advising companies. What is your experience? Because the good company won't go, oh no, we don't want to get in Africa. Say, how do we get around this? How do we make it work?
I think for us, we have seen exactly this problem. When we're trying to sell enterprise software, you are dealing with large organizations and you're dealing with governments. But we've seen it's almost a three-legged cycle where the first is to convince them of the technology and win that. The second is to get the contract signed. And the third is to collect the cash. So in terms of solving the problem, the one from an accounting perspective is that in order to manage our risk, we typically do not recognize the revenue in our books until the cash is paid. So that way, you're not recognizing contracts or revenue before you've actually got the cash out. But the other two ways of solving it for us have been what's interesting. Either you're working with partners on the ground in country who, either have better relationships with the local banks, with the reserve or central banks, and we've been able to manage it through that. Or what's interesting, talking about Nigeria as an example, is we've really adopted a serious cloud strategy for Nigeria. We've decided that in terms of managing our risk, and it makes sense for Nigerian companies, if we take their software, they're running their business to the cloud, and actually the bandwidth access from Nigeria is actually very good, so they are easily able to run off data centers in Europe or America. And then they're paying on a sort of consumption subscription-based model, and that gives the service provider a lot more control in terms of being able to provide that service, but it's subject to making sure that both ends of the agreement are met.
You talk about bandwidth. I mean, I've been in several African countries, and you go to the hotel and you log on and you sit and wait. You don't have to wait. Some of them make South Africa look primitive.
I agree. Nigeria,
in terms of speed of access and internet.
Yeah, in my experience, we were organizing a big, web conference, and I was nervous about it coming from South Africa, and there was absolutely no issue at all. It made South African bandwidth look slow.
Some compensation in Nigeria for the traffic jam. If you're in your car,
I mean, isn't the issue and the liquidity crunch for dollars specifically in various markets is a big issue.
So what do you tell the companies that you work with?
We advise a lot of banks on just literally doing their lending business into Africa. The one positive side of this, I think, is we've seen a number of banks start thinking about, do I have the ability to deliver a local currency alternative? So for a country like Nigeria, I mean, it's very painful to go through, but I think the commodity slump, the oil price where it is now, the dollar liquidity is actually forcing people who's active in that economy to start thinking a bit outside the box, come up with different sort of ideas. One of which, if you're a bank, for instance, can be if you've got access to Naira deposits to sort of make sure that you lend in local currency rather than relying on dollars. Or that you have a very sort of interesting switch option in your loan agreements. Now, I mentioned this because the one thing that I'm sure we'll get to at some stage this evening, is the discussion around the infrastructural needs. One of the things that we know, I mean, all of the facts tell us this, as there's still a huge amount of infrastructural development and investment that has to happen in Africa. I think latest figures put it at around $30 billion a year that is needed, that we're underspending on infrastructure. One of the issues, if you talk to your typical hard currency lenders, is they say one of the constraints is that you don't have local currency facilities available in country. Now, for me, it's quite interesting to see how this real challenge on dollar liquidity can lead to almost the development of a different product that you can use then for some of your infrastructure.
Okay, so that's innovative. Nomzamo, to add there.
So from a finding an accounting solution to a much bigger problem, I think that's sort of a short-term fix. It's not a long-term fix. Making sure that policy across African countries becomes directed towards making the liquidity or resolving the liquidity issues, and making sure that we move away from a dollar-based. And I know that sounds very ideological, but with African countries and many African countries being so dependent on the US dollar, it's a challenge, because we continue to be dependent on this currency, and yet we don't have enough reserves of the currency. And as long as there isn't any policy directive which is synced towards making sure that our own currencies are strong enough, we'll continue to have this problem.
I think, David, if I can,
Yeah.
sorry, liquidity is the net result of your inflows and your outflows. The bottom line is African countries need to increase their inflows as a result of their exports. And we need to move into a manufacturing age and into a consumer age where we are not just exporting raw materials and agriculture, but are actually beneficiating them in country so that we can get foreign currency into the country that we can use ourselves.
So it's still the colonial legacy. I mean, whatever you call the places, those ancient trade patterns are still there. What strikes me going around countries is that the difference between a lot of countries and South Africa, I'm not saying South Africa is better, but we had this great mineral development of diamonds and gold. So minerals built Johannesburg, and they led to the creation of a national railway system that is still pretty good and was once excellent and needs to get back there. So you've got railways, then you've got a good road network, and you've got secondary services that support the mining industry. Now, most African countries haven't had it at that scale. And I go through these countries, they've got pockets of well-developed cities. They've got areas where it's nice to live. And then you've got a lot of ramshackle stuff. Naked light bulbs hanging in little shops. You sense entrepreneurs, but they're not at the scale we want. These countries need to get critical mass.
Yeah, absolutely. And I think, when we look at local development, I think that's absolutely key. So how do we ensure that exports do come in, and so that we can hedge and get the dollars? And I think that when you look at the diversification within economies, that's key critical. So Africa, as you say, has relied on commodities and has relied on natural resources, and now more and more it needs to diversify its economies, move into manufacturing, move into other types, so that it can export and not be as reliant on imports. So then straight away you're seeing a natural hedge on your currency. And just if I can touch on a point around local borrowing. So I guess when you speak to multinational corporates, as I do all the time, both globally and in country, in my view, there is a local borrowing capability. So all the local banks do have balance sheets to offer local currency, and in fact that is often our preference to be able to do that, especially if you do play on the ground, such as Barclays Africa does. I guess though, what is key for multinational corporates is the fact that they can either borrow offshore in dollars, or they can borrow onshore in local currency. Either way, they do run a currency risk, because it's either repaying for the dollar loan at lower interest rates, or repaying for the local currency loan at extremely high interest rates. So actually, what is the tipping point between borrowing in dollars or borrowing in local currency? Yeah, and it is getting your mix right, and understanding the balance between the two. But I think that over and above convertibility or liquidity, that's also one of the biggest conundrums that the multinational
Isn't there a paradox
face.
here? Julie, you're from a big international corporate, big strong brand. On the one hand, your international corporate comes into the country and has international policy, international ways of doing things, and now they want to do, maybe they adapt, but they want to do those things locally. It's not at first glance in their interests to develop a manufacturing sector. They want to sell their products in that particular niche of the market. What we need, and one of our things we want to talk about, is entrepreneurs. Big corporates do not create jobs, by and large. They shed jobs. Entrepreneurs start businesses, and businesses create jobs. So how do we reward and encourage and incubate new businesses? I mean, is there a country that you've come across where, hey, they're doing the right things? They got the tax right, they've got the mentoring right, and we're seeing businesses start.
I think you're touching on a very sort of important bit there, David, is to say that you can only get your entrepreneurs and your SMEs really off the ground if they function in a regulatory environment where that is encouraged and where it's almost permitted to bloom.
What country is good at this?
Well, I think there's a couple of countries that's sort of quite good at it. I think most of the African countries sort of really struggle with it, and a part of that is just the way that they sort of think about politics and the role of government. So I was at the World Economic Forum a year or two ago where I heard this guy sort of talk about a very important bit is to say how sophisticated African governments are actually becoming. And that's absolutely crucial in the growth path, is to make sure that you put in place the right policies to nurture specifically SMEs, job creation and that sort of thing. I think there's a few lessons we can sort of take from South Africa where we've done it right and where we've done it wrong. But I don't know how other people think about that.
Of course, the difference with South Africa too, which complicates it, is I mean, a lot of African countries suffered from racism, colonialism, but not the social engineering that apartheid, the damage done by apartheid. We have extra issues there as well. I think it's just worth bearing that in mind.
Just to touch on what you're saying in terms of the social engineering that came with apartheid, for a lot of African countries, as much as it wasn't as sophisticated as apartheid was, we still do suffer from a lot of correcting of the wrongs of the past. So trying to encourage a entrepreneurship-driven or a enterprise development type of environment within these countries becomes very difficult because, number one, you've got the political powers saying that they want to push a particular agenda, but that agenda doesn't necessarily speak to create the jobs, create the entrepreneurs that create the opportunities for jobs to be created.
You know what's interesting, I think, is when you look at the whole value chain. So clearly multinational corporates, local corporates, bigger local corporates, small, medium enterprises, they all need to be part of that value chain, and each of them to some extent rely on each other. I think what's interesting around Africa is when you look at the wider value chain and the sheer size of the informal sector. How do you migrate the informal sector to be more formalized? So I'll give you an example. If you look at, 26% of the population across Africa only has traditional bank accounts. So financial inclusion, or the lack of financial inclusion, is a problem in Africa. And what does that truly mean? It means that the average entrepreneur who wants to develop doesn't have a formal or traditional bank account. So how do they then apply for credit? How can they grow their businesses in the traditional ways that we think about it? So I think it's incumbent on the bigger businesses in Africa to say, how can we stimulate formalization of the informal sector, which then can only improve our greater value chain?
That's we
Julie,
Sorry, I just want to add to the comment or the discussion. I think is quite interesting. I think the whole opportunity for SMEs or individuals, entrepreneurs in Africa needs, or it can only really flourish and come within a framework that lands up getting created often by the government. So you kind of need the governments of these countries to sit and say, right, we promise our citizens that we are going to harness modern technology, that we are going to make services available, that we are going to help stimulate these economies, that we are going to try and become more inclusive and bring people into the economy, whether it's through commercial farming, assisting, farmers and getting them into the agricultural part of that economy, or whether it's, in other things. I think part of a lot of the problems is that, okay, so maybe the governments have the intention, but they need to kind of put that in place. But the other thing is that so many people are still struggling with basics in Africa. So it's all good and well to try and get them economically active, but when they really still need access to basic healthcare, and that's not available to them because they're rural or it's education, and I think that's also where there's huge amounts that can be done, but you kind of need to start building those basic foundation pieces first before you're going to, well, maybe in parallel to enabling these people.
Bryan, first thing, Wildu?
Few people know that more people around the world are employed by small business than by large corporates. And in Africa, the figure is 58% are employed by SMMEs. And it's those companies, those entrepreneurs that start small businesses that are going to create employment and create growth within any country. So it's actually all about ease of doing business. And you asked for an example of a country that's getting it right, and I think Rwanda, you can't go far wrong in saying Rwanda have really, gone up the ladder as far as ease of doing business is concerned. And when I go around and speak to international clients in their home turf, what they're really looking for is certainty.
Yeah.
They don't really mind what the tax rate is. They don't mind what the legislation is. They want to know that it's going to stay the same.
You know what? Of course they do. We all do. But we're not going to get it. And the really good businesses understand that there is no certainty. So now how are you going to manage? You've got to go by principles, not systems. If you want to impose your systems on a new country, you're going to fail.
Correct.
And we've seen South African companies fail in Africa, I believe, talking to them and researching it, because they want to impose their way of doing things instead of saying, how do they do things here? And how do we do that better?
You have to partner with somebody on the ground who knows the regulators, who knows the laws.
So I'm not interested in certainty. Business. We have guests in the studio every night saying, there's such uncertainty because Trump's been elected and the Brexit. I mean, this is life. Wildu, you were going to say something.
No, I was going to make exactly the point that these two made is to say that it is all about making sure that the totality of what you want to do economically is addressed through good governance, good government policies, and making sure that you unleash what you can through SMMEs.
Well, we need to end this part of the program, and we'll get back to education. That's one issue that we need to talk about. I think we haven't exhausted the topic of entrepreneurs and how to help them. I think one of the things is that the business has to come in, and that mindset of we do business and I wish the government would get organised and help us. You can't work like that. You've got to work with the government. And I think of Mark Bristow with Randgold Resources in Mali. There's a mine. They haven't got a road. Mark Bristow says, we'll build the road. Now, along the way, can we build some schools as well for you? And the government says, now we're talking. I mean, it's so simple. But most companies can't do that. They think it's political. We're going to take a short break. We're back shortly with more on investing in Africa with our panel. Welcome back. We continue our discussion on the investment environment on the African continent, and my guests are Cheryl Buss, who is Head of Global Clients at Barclays Africa, Bryan Leith, Chief Operating Officer, KPMG Africa, Julie Tregurtha, who is Head of Database, Technology and Mobile Sales for Southern Africa at SAP, Wildu du Plessis, Partner and Head at Baker and McKenzie Banking and the Finance Practice Group, and Nomzamo Xaba, who is Group Executive Research and Advisory at Empowerdex. Cheryl, seeing you started last time, let's get you to kick off again there.
Thanks, David. And I think in the first part we touched on some interesting topics, and we made a small mention of mobile money and the proliferation and the growth of mobile money, and I think that really warrants a further discussion. When you look at M-Pesa, which is the mobile money, started in Kenya 10 years ago, and we're seeing vastly growing across the rest of African continent. And just the impact that mobile money has, as I said earlier, financial inclusion in terms of traditional banking is only 26% of the African population. But now, through mobile, you're actually seeing people use non-traditional methods and digital methods to actually do their banking and to actually facilitate trade across Africa. And I think that this is hugely positive for corporates. And I think often corporates, someone said to me the other day, but why at a corporate forum are you discussing mobile money? And the answer is very simple, is that a corporate treasurer today or a group financial director today cannot ignore the impact of mobile money and how it can open up their supply chain and value chain. Take, for example, infrastructure across Africa. If you are going to deal in cash, it takes a long time on rudimentary roads to move cash around. Now, if you're trading via mobile, you can do it instantaneously. And so therefore your whole value chain and supply chain is opened up because you can make payment and receive payment a whole lot quicker. And I think most importantly, as my last point there, is that there's over 1 billion mobile phone connections across Africa. So 1 billion mobile phone connections, 25% of the population only having access to traditional banking accounts. There's a huge population that perhaps is untouched if they are not being touched through the actual mobile money banking chain.
Julie, what about technology, that and other?
Yeah, so Cheryl's comments sort of stimulate a few thoughts in my mind. It's interesting. The one is necessity is the mother of invention. And in Africa, I think necessity and constraints has led to invention and innovation, and this is a prime example. And what it's really led to is, the Silicon Valley of Africa is now deemed to be Kenya. And it's largely because of the M-Pesa success, which put mobile money on the global map. It came from there. But what it's also done, and I find it very fascinating, going to Kenya and watching people that work for our organization there who are getting paid their salary monthly into their traditional bank account, are then immediately transferring money into their M-Pesa account and using that to make their monthly payments, pay all their bills.
So why have a bank account?
Because it's lower charges. And I think this is what disruption is all about in terms of what technology can do. It lands up challenging the traditional models of financial services and banking and many other things. If you have a look, I think the opportunity is only at the beginning, because obviously the mobile phone and the proliferation of internet access is really beginning now. People talk about the number of mobile phones and mobile connections across Africa, but many of those phones are not smartphones today. Even in South Africa, we only have 37% smartphone penetration. In Nigeria, it's in the upper 30s. In Kenya, it's in the upper 20s. And some countries like Uganda and Rwanda, it's between 11 and 16% smartphone penetration. So the opportunity still for internet access is going to grow, dramatically. And with that will come, additional huge amounts of innovation, I think, with technology and being able to do things differently.
Let's talk about the environment financially. So that's clearly a technological environment. But we talked about regulation of business, ease of starting businesses. Let's look at tax and the incentives. I mean, they say if you want more of something, then don't tax it. If you want less of it, tax it. And is it the Laffer curve? You reduce taxes, the more economic activity, you'll get more tax than you would at higher rates, and so on. You've come across, Bryan and Wildu, tax regimes. Who's getting this right?
Well, I think I want to tie it into what Julie was talking about, because the more we go into high-tech and fintech in particular, the more difficult it is to tax transactions. Because you can have cross-border transactions, you can have paperless transactions, you can have no audit trail. And I think all African countries are actually seeing that one of the other ways they can raise finance and increase liquidity is through tax. And having a better tax administration, a simpler tax administration, similar to what we have in South Africa, which is really a flagship worldwide. So tax is vitally important to make sure that you don't have undue money laundering or any money laundering at all, that you're actually collecting the revenues in country that you need to do. There is actually an organization that is now pan-African in nature, where all the tax authorities actually speak to each other and learn from each other. And a database is being created, a worldwide database, so that you can actually track movement of money between countries. So in KPMG, we see that our clients are coming to us and saying, we cannot afford to fall foul of the tax laws. And if you want to do business and if you want to be successful in any country, you have to be an honest tax citizen. And it's really the right thing to do. It's all about tax morality.
And you have to do what you're told as well if you're breaking the law, as the MTN found out in Nigeria. I mean, they are still recovering in reputation terms from that mistake. You were going to say, Wildu?
No, I was going to say, I mean, I agree with that. I mean, it does bring us onto a slightly sort of different topic, and that is, it's not only the tax laws that are becoming more sophisticated and being really sort of well policed in various countries, not only in Africa and in developed markets as well, but the whole issue around compliance, money laundering, corruption, that sort of issue. I mean, we see. I would think sort of it's probably the biggest growth area for us as a business in relation to investing in Africa is making sure that clients, African clients and non-African clients alike, understand the increasing complexity of tax legislation, anti-corruption legislation, that sort of thing.
I think we have to be careful though, and I think on the one hand in South Africa we've done pretty well in King and all that, the principles of governance and is it compliant and so on. But you know, every time you buy something in South Africa, you've got to prove where you live. You buy a pair of sunglasses, you've got to get your water and light account, which is wrong. And you know, I think it's gone too far. And I was speaking to a guy in Uganda about this, and I was telling him about what I was sort of saying proudly, how far we are. And he said, you know, the bad guys are going to get round it. He said, all you're doing is the good guys proving that they're good, the honest people proving that they're good, at great inconvenience. The criminals are going to get round it. So I think we just have to be careful, because they always do. Another question I wanted to bring up before we get on to back to the family business and the entrepreneurs, Nomzamo, is South Africa as a home for big businesses, a jumping off point for big businesses, entrepreneurs going into Africa. I found two things when I was traveling in Africa. Over the last 18 months, I've been to 12 countries, and it was the most impressive, by the way, was Côte d'Ivoire, Ivory Coast, in terms of a sense of an economy that's growing and so on. French still very involved there. It's an interesting story. But they were saying you can't regulate too much. So there's got to be this balance. And there's also a bit of a sense of South Africa now, you've been rated top in the world for your stock exchange and your bank. Now you're going to come and tell us what to do. So there's a bit of resentment at South Africa. There's also, they don't know as much about us as we think. You know, we think, oh, everyone knows about South Africa. No. President who? Yeah. The only president they know is Mandela.
That's true. So as South Africa, we've done a really great job of regulating, although to an extent we've over-regulated. We've got regulation for, poppy, we've got regulation for BEE, we've got regulation for everything. Name it, we'll regulate it as a country. And we've gone a little bit too far as that's concerned. And there's also then the problem that our regulation doesn't speak to each other. So you may find that you are being over-audited on many matters when one audit could have been sufficient to cover all the matters. And we were not also doing a very good job in terms of telling the rest of the continent that we're, number one, part of Africa, and number two, what are the things that we do to be part of Africa.
Just let's go along the sense of resentment, personal experience in area, or a bit of suspicion, you know, a new colonialism perhaps from South Africa, or attempted, unconscious perhaps, but there.
That isn't part of the issue. And again, I mean, I render professional services, so my world is quite different to that trader. But the one thing that I do think we do wrong in South Africa is we do tend to think of it, our lawyers, our accountants, we tend to think about this idea of saying, I can successfully go and advise on a transaction in Rwanda, and I'm going to do it from behind my cherrywood desk in Santa. Yeah. It does not work. So I do think there's a lot of introspection we need to do. I do think a lot of South Africans get it right. But if you look at the success stories, if you look at the breweries and that sort of thing, this is literally getting on the ground. Someone made the point earlier. You have to be on the ground with a very deep understanding of local reality.
Well, the SAB model, I worked there for a time and I watched them do it, is we don't send a whole team in. We send a brewer, and we send a finance man and maybe a chief executive for a time. The rest, it's local. You draw on the local expertise. Cheryl.
Yeah, absolutely. And I think to Wildu's point, doing a fly-in, fly-out model just doesn't work. You have to entrench yourselves with government. You have to understand government policy. You have to understand your local supply chain. And I think to that as well, that's only to your competitive advantage. There was an article written recently by a Boston Consulting Group and Accenture talking about the rise of local corporates and local businesses, and actually so much so that they are perhaps becoming a serious competitor to the bigger, more multinational corporates. Why? They're on the ground, they have the local relationships, they have the local understanding, they have the local people, they're there for the long term because they're not going anywhere else. And I think that brings a lot of advantage. They're also more agile. You know, they don't have to go to a New York head office or a London head office to make a decision. And so you're starting to see this rise of local that I think is for the benefit for intra-trade across Africa, which we also see starting to increase.
David, I think an important thing that we mustn't forget about is when businesses in South Africa look to expand, and I mean, let's not forget about Dangote, who out of Nigeria is expanding across Africa and who made his world-class fortune in Africa. But businesses speak to me and say, where do we go? Generally, they'll be in Southern Africa already, primarily South Africa, but they realize they need to get into East and West. But they look at the 54 countries and want to know, where do I set up shop? And the bottom line is they're going to invest in probably 1 or 2 countries initially. So regionalisation and having economic trade zones between countries is absolutely vital to encourage investment, because a big manufacturer is not going to set up shop in Kenya, Tanzania, Uganda, Rwanda, Ethiopia. They just cannot do that.
Why not?
Well, it's too many eggs in one basket. And basically there isn't the demand for the product in the region that would warrant having so many establishments. So you need to have ECOWAS in the West, the East African States Communities, SADC in the South, need to start working more and more closely together and making sure that there are not restrictive customs duties, excise, all sorts of tax implications and red tape. And you know, when you spoke about red tape, I noticed when I came into this building this morning, I filled out the exact same information on 3 forms before I could get into the studio. So that's just an example of how we over-regulate and make doing business difficult.
Yeah.
I want to make a comment about the regulation and legislation. I think a lot of that is based on the industrial types of economies, which actually we've moved on from 10 years ago. And I think today what countries need to look at is how and what to regulate and what legislation you need that is not inhibitive and that actually still allows digital transformation and that kind of advancement. I think what some companies like is the fact that in certain countries in Africa, the legislation and the regulation are not that well defined, but that almost creates opportunity in itself. And if you look at a company like Uber, which is a classic example of a disruptive company and its success and the way that it's taken off in some of the countries in Africa because of the lack of legislation and regulation, compared to now there's these issues in the US and in the UK about employment contracts and benefits.
But you see what they've done, these disruptors, and the cell phone in South Africa, the cell phone companies did it and the taxi industry did it. Before anyone realized there was a taxi industry, it was in control. And to try and regulate it when that's happened. Same with the cell phones. A lot of that developed, DSTV and digital TV, before they realize that there's a monopoly. Now what do you do with it? And the consumer loves it. So Uber, Uber's gone so fast, you can't unroll it.
But that's what I'm saying. It's actually, the innovation is coming faster than these.
But
the regulators know how to keep up. Yeah. I mean, another great example, which I think there is an immense opportunity in Africa, is drones and drone technology. And you could send drones out to rural areas to drop off medicine and drugs, to take spare parts for plant and equipment. You can even send a book on a drone. In the US now, they are so sort of stifling the whole opportunity for that because of all the regulation around it. In Africa, no one's really got there yet, which means that's amazing because it can, you know...
That's the place to be. Where isn't make the regulators follow you, isn't it? I want to tell a quick story about when I was in Mauritius. Let me drop a name. I was interviewing the deputy president, and he told me a story about a Nigerian delegation that came to Mauritius, and only half of them arrived. They said, where are the others? They said they couldn't get visas. So he said, we'll scrap visas. So he scrapped visas that day. He said the issue of visas compared to the damage that it does trying to get it and the goodwill that's lost and the cost, just did it. That's the attitude we want. I want to talk about family businesses. 94% of businesses in Europe are family-owned businesses, and most of them are small. What is the state of play with businesses in Africa? In South Africa, we have a large part of the population where families were destroyed by apartheid. Education wasn't good enough for people to be entrepreneurs. We're still living with that. What's the position in Africa?
Well, I think you've got two sectors really. You've got the SMEs, and then you've got the mid to large corporate type family run businesses. And it's actually amazing when you travel into Kenya, the number of successful family businesses that is there is really overwhelming. You know, South Africa doesn't come close to comparing to that type of growth, and it'll be anything from a trader to an importer of trucks to importer of luxury vehicles to manufacturing. Dangote is a case in point. That was, you know, family run to start with, and I think that the opportunity there is huge, and I think that those are the type of businesses that are disrupting in a country and making the multinationals or the bigger corporates actually sit back and go, wow, these are definite forces to be reckoned with.
So to come back to our earlier point, the critical mass, are these companies developing that critical mass?
Oh yes, absolutely, and I think you picked a great example. I mean, that whole East African coast is still very, very much family business dominated almost. I mean, we do quite a lot of work in Kenya, and we keep on having discussions with people saying, but you know, if you just look at activity on stock exchanges, why is Johannesburg so far bigger than any other exchange on the African continent? Nairobi being sort of one that you can see, that is where you should have quite a lot of activity. The answer time and time again is saying, we sit with a predominance of family-owned businesses, and they would not want to relinquish control by listing.
Also, it means that they are successful, because there are lots of family businesses that go for listing because they need money to expand further. They need to get capital.
But that's where financial inclusion is the real burden, because we need more family business, as I said earlier, to create employment and growth within the country. And I think many small businesses battle to get finance from, unfortunately, particularly the larger banking institutions. And that's why you have a flurry of cell phone banking, you have a flurry of smaller banks coming up, making it easier to get access to finance. And I think that's where we as a country and we as a continent need to make access to finance easier.
Nomzamo?
I think going back to regulation, unfortunately, South Africa has gone some way to make sure that access to financial services happens, particularly from the banking sector, because they have regulated that the banking sector needs to spend a certain amount of their value of business funding and providing innovative solutions for smaller businesses, SMMEs, etc. So we as a country, I think we give an example to the rest of the continent on how you can regulate for good. The question, though, still remains: are the banks doing enough? Because you're effectively saying to the banks and the various funders, do what you do, but be innovative about it and focus it on the smaller businesses.
It's also interesting, and we need to unfortunately start wrapping. And I want to ask you each to think about a story from your involvement in Africa, an example, a story that illustrates why you are positive about where we're going. There are lots of issues, but I want you to tell us a story about why it's good to be positive, an example. The story I wanted to talk about is, well, it's alerting us again to the role of minorities. So you have Indian community in South Africa, Jewish community in South Africa, tiny part of the population, huge impact economically. And it's the family business. That's where it comes from. And maybe it's because they tend to be in a minority, they need to look after themselves and so on. And I always think of the Oriental Plaza in Johannesburg, one of the old shopping centres. And you go to one of the men's outfitters shops. The boys work, they're at school, they work in the shop on a Saturday morning. Mom's running the till, dad's doing the buying and keeping an eye on things, and granddad's sitting outside in a chair looking at what the opposition's doing over there. And family businesses don't work 9 to 5, Monday to Friday. They work 7 days a week. They talk about it, they live it. And it's that kind of culture that if we can expand it into South Africa as well, where we don't have enough entrepreneurs. So who wants to start with a story about the future of Africa?
Well, I mean, I always say the reason why I enjoy doing the work I do is because you actually do get that from the mom and pop shop that's sort of sitting in Dar es Salaam, who's manufacturing something for the building industry, to the very, very mega sophisticated corporate sitting either here or in North Africa. And I mean, just the difference of things that you have to work with and making sure that everything works. I mean, that's actually phenomenal. I don't know where else you find that.
Julie?
For us, SAP's sort of, mantra is to improve people's lives. And one part of that is obviously, working with large corporates and governments. But another part of it is also really uplifting communities. And, we've mentioned some of the basic things like, in the agricultural sector or the healthcare sector. One of the things that we've done is we've worked with the University of Heidelberg on a project in Kenya which has created a mobile tablet-based application that does cervical cancer screening. So field workers that are out, literally in the rural areas can gather certain information. They get, guided through this application. They're not oncologists. They don't have the expertise in that area, but they work with the patient and can make sure they get the right information. It's all uploaded into the cloud, and then you've got a proper oncologist who can, go through the information, the data, and then provide certain treatments, to determine what medicine they need or what the risk is around that if they're HIV positive as well. And so it's not commercial, it's not necessarily business, it's not necessarily, but it really is doing something that has the ability to improve people's lives. And I think it's rewarding to be part of both parts of what's happening in Africa today.
Nomzamo?
So what we've seen a lot of is the foreign companies, the European companies and the American companies that come into South Africa to launch themselves into Africa. And that gives me hope to say that, number one, the South African economy will continue to grow, but number two, we're still being seen as the base point from which at least you can go into SADC. And we're always very clear with them in saying, please don't assume that what works here is going to work in East Africa or West Africa. So we are a nice vantage point from which you can learn about the African environment, but we are not the end all of Africa. And understand the legislation that applies to you in different regions. So in South Africa, you're going to have different legislation to what you will have in Zimbabwe. So we've had people who say to us, but I've been asked that I need to be 25% black in South Africa. And we say, well, black in South Africa is very different to black in Zimbabwe. So don't take that as your point of reference. Know the economies in which you are operating.
Right.
I think we mustn't let the immediate and short-term horizon put us off the Africa opportunity. It is very frustrating to take 2 steps forward and then 1 step back with every day you open a newspaper and you read about new scandals and new worries. But the honest truth is Africa is the next big opportunity. And I think it's very exciting to be part of that, because we are going to see lives change. We're going to see leapfrogging technology. We've spoken about cell phones and banking, people who've never seen a bank who are now banked, people who've never had a landline who have now got smartphones. The next one is electricity. You're going to have people with electricity who've never seen a copper cable. So we can be part of that, and we can be the enablers and the disruptors to make sure that it actually happens. And I think that's very exciting.
I haven't seen a bank for a long time.
Exactly.
I have a friend in the United States who still uses a checkbook. There are people here who've been working for 10 years that have never had a checkbook.
But you know, David,
I need to get on to Cheryl to finish
I
off.
just want to say the biggest risk in Africa is not being there.
Yep. Cheryl?
Yeah. Completely agree.
I'm asking you to wrap up.
I'm hugely optimistic about the opportunities on the continent. I think that despite the challenges, the opportunities are vast. And if we look at Barclays Africa Group, we have a similar strategy to SAP, which is one around shared growth. And shared growth, which is one where we assist our 12 million customers on the continent to prosper, and through that we will actually see our communities prosper. And for me, that makes me proud to work for an organization that is making a difference in the communities we operate on the continent, not only today but for the long-term future.
Right, we've come to the end of today's show. I told you who they were at the beginning and in the middle, and as we say in broadcasting, we'll tell it to you one more time. Thanks to my guests today, Cheryl Buss, who is Head of Global Clients at Barclays Africa, Bryan Leith, Chief Operating Officer at KPMG Africa, Julie Tregurtha, Head of Database, Technology and Mobile Sales for Southern Africa at SAP, Wildu du Plessis, Partner and Head at Baker & McKenzie Banking and Finance Practice Group, and Nomzamo Xaba, who is Group Executive, Research and Advisory at Empowerdex. And thanks for watching. From me, David Williams, and the team, goodbye until next time.